Accurate pricing is a critical component of an organization's financial success and competitive positioning. The ability to price products and services appropriately is dependent on a clear understanding of the true costs associated with their production or delivery. This is where actual costing plays a pivotal role, providing organizations with the necessary cost data to make informed and profitable pricing decisions. Understanding the limitations of standard costing and pricing. Traditional standard costing approaches, while widely used, can often fall short in providing the level of cost transparency required for effective pricing strategies. Standard costs are typically based on predetermined estimates or historical averages, which may not accurately reflect the current market condition, operational efficiency, or the true costs incurred by the organization. When relying solely on standard costing, companies run the risk of making pricing decisions based on incomplete or distorted cost information. This can lead to several challenges. Inaccurate profit margins. Standard costing may not capture the full cost associated with producing or delivering a product or service, resulting in an overestimation of profit margins. This can lead to pricing that is too low, potentially eroding profitability. Inability to respond to market changes. As market conditions and costs fluctuate, standard costing may not provide the agility required to adjust pricing in a timely manner, making it difficult for organizations to remain competitive. Lack of cost transparency. Standard costing can obscure the true drivers of cost, making it challenging for decision makers to identify opportunities for cost optimization or to understand the impact of pricing decisions on profitability. Suboptimal pricing strategies. Without a clear view of the actual costs involved, organizations may struggle to develop effective pricing strategies that balance competitiveness, profitability, and customer value. The advantages of actual costing and pricing decisions. In contrast, actual costing provides a more comprehensive and accurate understanding of the costs associated with producing or delivering a product or service. By tracking the precise cost of materials, labor, overhead, and other relevant expenses, actual costing offers several advantages for pricing decisions. Improved profit margin visibility. Actual costing enables organizations to understand the true cost of each product or service, allowing for the calculation of accurate profit margins. This helps ensure that pricing is set at levels that maintain profitability and competitiveness. Responsiveness to market condition. With actual cost data, organizations can quickly adjust pricing in response to changes in material costs, labor rates, or other market dynamics, ensuring that their offerings remain competitively priced. Enhanced cost control and optimization. By understanding the drivers of cost, companies can identify opportunities to optimize their operation, reduce expenses, and pass those savings on to customers through more competitive pricing. Informed pricing strategies. Actual costing provides the necessary cost data to develop pricing strategies that align with the organization's strategic objectives, such as market share growth, revenue maximization, or profit optimization. Pricing differentiation. Actual costing can help organizations differentiate their pricing based on the unique value proposition of their product or services, rather than relying solely on cost plus or market-based pricing approaches. Implementing actual costing for pricing decisions. Effectively incorporating actual costing into pricing decisions requires a well-designed and integrated approach. Here are the key steps organizations should consider. Establish robust cost accounting practices. Implement a comprehensive actual costing system that accurately tracks and allocates all relevant costs, including direct materials, direct labor, and indirect overhead expenses. This may involve the use of advanced costing methodologies, such as activity-based costing, to ensure the accurate assignment of costs to individual products or services. Integrate actual costing with pricing models. Develop pricing models that seamlessly integrate the actual cost data provided by the costing system. This may involve the use of pricing software, or the creation of custom pricing algorithms that can quickly adjust prices based on changes in actual costs. Regularly review and update actual costs. Continuously monitor and update the actual cost data to ensure that it reflects the latest market condition, operational efficiency, and cost drivers. This may require the implementation of automated data collection systems, the establishment of regular cost review processes, and the involvement of cross-functional teams to validate the accuracy of the cost information. Align pricing strategies with organizational goals. Ensure that the pricing decisions informed by actual costing data are aligned with the organization's overall strategic objectives, such as market share, revenue growth, or profitability targets. This may involve the development of pricing policies, the establishment of pricing governance structures, and the implementation of performance management systems that incentivize the effective use of actual costing in pricing decisions. Foster a culture of cost awareness and pricing expertise. Invest in the training and development of employees across the organization, from finance and operations to sales and marketing, to enhance their understanding of actual costing and its role in pricing decisions. Encourage a culture of cost awareness. and empower employees to actively participate in identifying opportunities for cost optimization and pricing optimization. Leverage data analytics and visualization. Utilize advanced data analytics and visualization tools to transform the actual cost data into actionable insights that can inform pricing decisions. This may involve the development of interactive dashboards, the creation of scenario-based pricing simulation, and the identification of trends and patterns that can guide pricing strategies. Case studies, actual costing and pricing decisions. To illustrate the impact of actual costing on pricing decision, let's explore a few case studies. Case study 1, manufacturing company XYZ. XYZ, a mid-sized manufacturing company, had long relied on standard costing to inform its pricing strategies. However, as the company's product portfolio expanded and market conditions became more volatile, the limitations of standard costing became increasingly apparent. XYZ decided to implement an actual costing system to gain a more accurate understanding of its costs and improve its pricing decisions. By investing in a robust ERP system and implementing detailed cost tracking and allocation processes, XYZ was able to develop a comprehensive understanding of the actual costs associated with each of its product lines. This data enabled the company to make more informed pricing decisions, adjusting prices to ensure profitability while maintaining competitiveness in the market. The implementation of actual costing also allowed XYZ to identify areas of cost optimization, such as streamlining production processes, negotiating better supplier contracts, and adjusting the product mix to focus on the most profitable items. These cost-saving measures enabled the company to offer more competitive pricing without sacrificing profit margins. As a result of the actual costing implementation, XYZ experienced a 15% increase in gross profit margins over the course of 2 years, as well as a 12% increase in market share as the company's pricing strategies became more responsive to market dynamics and customer value perceptions. Case Study 2, Service Provider ABC. ABC, a professional services firm, had traditionally used a standard hourly rate for its consulting services, based on a general estimate of the costs associated with service delivery. However, as the company grew and diversified its service offerings, the limitations of this approach became increasingly apparent. ABC decided to implement an actual costing system to gain a deeper understanding of the true costs involved in providing each of its services. By tracking the actual time spent by consultants, the materials and resources consumed, and the overhead expenses associated with each client engagement, ABC was able to develop a more accurate pricing model. The implementation of actual costing enabled ABC to differentiate its pricing based on the unique requirements and complexity of each client project. This allowed the company to charge higher rates for more specialized or resource-intensive services, while maintaining competitive pricing for its more standardized offerings. Moreover, the actual cost data provided ABC with valuable insights into the profitability of its various service lines, enabling the company to focus on the most profitable areas and make strategic decisions about investments, resource allocation, and service expansion. As a result of the actual costing implementation, ABC experienced a 20% increase in overall profitability within the first year, as well as a significant improvement in client satisfaction due to the company's ability to provide transparent and value-based pricing. Conclusion: actual costing is a powerful tool that can significantly enhance an organization's pricing decisions, enabling it to price products and services more competitively and profitably. By providing a clear and accurate understanding of the true costs involved, actual costing helps organizations overcome the limitations of standard costing and develop pricing strategies that align with their strategic objectives and market conditions. Through the implementation of robust cost accounting practices, the integration of actual costing with pricing models, and the fostering of a culture of cost awareness and pricing expertise, organizations can unlock the full potential of actual costing in their pricing decisions. The case studies presented demonstrate the tangible benefits that can be achieved, including improved profitability, enhanced competitiveness, and stronger customer relationships. As businesses navigate the increasingly complex and dynamic market environment, the strategic role of actual costing and pricing decisions will only become more crucial. By embracing this approach, organizations can position themselves for long-term financial success and maintain a competitive edge in their respective industries.